can you fully automate or replace back office people and roles? I think the answer is no. But what you can do is take the mundane work away and allow that human to do the highest value work. It's not about replacing people. It's about making your people dramatically better at what they do.
Well, today we have with us Marc Rehberger, the former head of tech development at Customers Bank. How are you doing today, Marc?
I'm fantastic. You all?
Good.
Yeah, we're doing good.
Pretty good.
Yeah, so to kick us off, can you give us kind of your best plain language explanation of what AI actually is at its root?
Wow. That way to hit me with like the big like 800 level question right out of the box, right? How do I take something that is transformationally changing the world and boil it down to simplicity, right? So the way to think about it is we've hit this I call it a supernova moment where computing has gone from complex coded answers. How do you ask the question? Even a year ago, how do you ask the prompt? To just having a conversation with a tool that has an infinite ability to find information, sort through the information, and try to find the answer that fits you and your question. And so it's very futuristic. The future is here, right? Some things that we thought were, sci-fi, 5 years ago are actually doable today. But think of it as simply a tool that can make a human much smarter than they were before. Is that simple enough?
Yeah, I think so.
Does it make sense?
It makes sense to me, yeah.
Okay.
Marc, can you give us a quick history lesson on why machine learning and large language models came to be and why they suddenly matter in the banking industry?
Yeah. Again, a really easy softball question here, guys. I appreciate it. So, the tech industry has been working very hard over the last decades to figure out how do we get information in a fashion that can be digested and helpful for humans. And if you think about the basis of any system, it's a if-then rule set, right? How do you say, hey, here is a situation or a set of data, and if it presents in a certain way, I want you to do the next step, and then the next step, and then the next step after that. So as things evolved in that process, that was a very much a code level basic, DOS, all those things, do this for me. And it would do literally what you asked it to do. The next generation of that was machine learning, right? And machine learning is the basis of AI. You can't have one without the other. They coexist and they build upon each other. They're the stepping stones. So machine learning, the way to think about machine learning is you taught the computer what this was with repetition. So for example, on the visual side, you would send them a picture of this is Marc, this is Marc, this is Marc. You show 10,000 pictures of Marc, the machine starts to understand, hey, that's Marc, right?
Sure.
But it only knows what it knows, and it only knows what it's taught to know. So it's pretty rigid and pretty structured, right? The jump to large language models is really thinking about inferring or being able to make a decision on what something could be. 1 + 1 is 2. How do we put these pieces together and build out more original thought or more intelligence, right? And that's where the AI words come from, right? These models have access to as much data as you want to give them, and they have a set of rules that they try to find the answer that is most likely the right answer for your question. Now, I say that because you have to understand the foundational LLMs that are out there today, they'll be different tomorrow and the day after, but they're based on getting the best answer for you and making you feel good about it. So if you ever notice when you're using Claude or ChatGPT or any of them, you feel really good after you ask a question. That's a fantastic question, Marc. Your original thought's amazing, right? But it uses inference to get to the most likely answer so it can make you feel good. It can be wrong a lot of the time, right? And so if you think about that, it can get to 80% pretty darn quickly. And that 80-20 rule is going to apply to pretty much everything across the agentic world and the AI world. But the devil is living in those 20% details where it could be wrong. And so how do you know it's wrong, right? And then I'll expand on a concept, and then we can come back to your next softball question. I'm sure it's going to be easy. Is how do humans understand what we know, right? So if you think about the universe, Mark knows this much of data or time or philosophy, or et cetera, right? I know this stuff here, right?
Right.
Then there's another concentric circle around the outside of it. It's maybe this big, maybe probably this big, of all the things I know I don't know, right? I know it exists and I'm aware of it, but I just know I'm not good at that and I'm not there, right? And then there's a whole universe that's much, much bigger of everything I don't know that I don't even know exists, right? Like the sixth dimension, the seventh dimension, right? I have no clue about them. I don't even know that they're there. So the consciousness of being able to understand those pieces also helps you understand how AI is thinking about things also. If you go backwards in time, 5 years, the machines would learn off of the human. Right now, they're learning off of the data. So a little different concept there, but I hope that makes sense and helps flesh out how we get to places where you can get answers given to you by an LLM that are completely false, but you don't even know you don't know. So if it told me a chemical structure, I don't know if it's right, but the magic happens. And this is, I think, one of the biggest points is matching an LLM or agentic AI or AI itself with deep expertise is where the magic really happens.
Perfect. No, I think it's really interesting. And I think that 20%, and you said the devil lives in there, when we're talking about such a heavily regulated industry like banking, maybe that's more of where you want that human in the loop, or what we've also heard lately is expert in the loop, to kind of bridge that gap between what are we trusting with the 80% and what are we monitoring with the 20%.
Correct. You're exactly right. In the world of banking and prudential regulators, we don't have the option to be 80% accurate or 90% accurate. We have to be 100% fact certain accurate, right? Otherwise, we can get ourselves in trouble and we can hurt consumers, which we don't want to do. So great point about the human, right?
Yeah.
The AI can be really good, right? The tools out there are amazing. But if you're not going to have the expert that can understand how to guide the tool, approve the tool, and make sure the tool is not drifting, right? There's this concept of agent drift or decay, right? Over time, and you probably have seen this if you've ever done a conversational chat, the larger the conversation gets, the more inaccurate it gets. So you could have model drift, right? The model gets too big and gets to know too much and starts to infer too many different things. Or the agent itself can drift and start to make assumptions or bad answers. So it is critical, especially in our space, to have the human expert be involved in really monitoring the tools. I'll give you another good one-liner. What AI has done for the world is it's taken away the mundane work, allowing the human to do much higher level work, right?
Yeah.
And that once you experience that with AI, there's no going back. One of my favorite shirts is it's a reference to Alice in Wonderland, and it says there's no going back. Once you go into the rabbit hole of AI, you never go back.
Well, you talked on the efficiencies, right? Once you start gaining those efficiencies, it's tough to go back. And trying to set the stage here a little bit is you look at some of our smaller community financial institutions across North Dakota, and some of them are struggling to fill support and back office roles. So how can AI help take pressure off those teams while letting the people while letting the people that they have focus on the work that actually drives revenue?
So that's a great point there. There's two pieces to that puzzle, right? One of them is how do you can you fully automate or replace back office people and roles? I think the answer is no. But what you can do is take the mundane work away and allow that human to do the highest value work. So let's think about fraud as an example, right? This is something where, we learned through PPP that the fraudsters were usually one step ahead. So we had to figure out how to catch up to them, right? And that process of investigating A fraud case or a SAR, it takes many, many, many hours. You know, today, you can deploy technology that reduces that time by greater than 50%. So you can actually double the capacity of your human to be able to do those fraud investigations, and the accuracy gets really high. So in my life, we did 4 different generations of AI in the fraud world and watched the efficiency and effectiveness ratio of the work of the AI go from low to mid 80s up to the high to mid 90s, but always with the human in the loop, always with the human saying, okay, that's right, and the model continually learning. There's another concept out there, which is really interesting. It's twinning or synthetic twinning of individuals and helping create legacy knowledge of those jobs. So if you think about keeping it simple, let's just stay in the fraud world, right? Can we create an AI tool that can triage all of those cases coming in, right? Based off the human knowledge that is existing and evolving and growing that knowledge base into a legacy system. And now you can do a lot more work with less people. This breaks the binary, right? And that's a huge thing, right? If you think about banks that want to grow, right? Usually there's a specific binary thing you have to do it, right? So think about SBA lending. If you want to be $100 million a year SBA shop, you've got to hire 5 to 6 business development people to go out there and each do $20 million a year on average, right? They get you at $120 million. If you want to get to 200 million, you got to hire 10 of them, and a manager, etc. But with the tools today that are agentically powered to help understand the data, the customer, the ingestion, the underwriting, you can easily break that binary now and do it really, really well with half the people, right? You don't get rid of them, but you're leveling up the people to do their job dramatically better. So you think about an RM, right? They still are gathering packages, ingesting the data, either through OCR technology, which is fallible, or they're manually entering it into a spreading tool, right? All that can be done now with agentic. All of it can be done with that now. And so that frees that RM up to go out and do more. So that a great RM in the relationship manager, I shouldn't use acronyms, in the small business administration world can do $50 million, right? That's the experience that AI is doing. It's not about replacing people. It's about making your people dramatically better at what they do.
No, I would agree with that. And to kind of dig more, I guess, to get more into the weeds on that, right? It's not replacing people, it's reallocating that capital more to that, either the revenue generating roles or customer facing support roles. Because like when I call into my bank, I don't want to be talking to an AI agent. I want to be talking to a human. And I think our community financial institutions can utilize AI to help with those tasks that are kind of behind the scenes that take 1 or 2 people to do, and reallocate those 1 or 2 people to have more of a customer facing role.
I think the way I think about that is if you're only thinking about AI as a cost saving measure or a cost cutting measure, you can only get to 0, right? You can't get past 0. But if you're focusing on the revenue, you can grow exponentially. And that's a huge shift. And I would say this, things are moving so damn quick. A month ago, I probably agreed with you. I would rather talk to a human than to talk to an AI. I had to renegotiate a contract with a certain satellite radio provider that shall not be named. And they opened up an AI, and me being halfway intelligent, I got a better deal. I got a better deal than I had before because I knew how to work the AI, right? And so it's less human, but it's also, pretty interesting concept, right? I can ask more direct questions because I'm not going to offend anybody, and more efficient because I can move it along really quickly.
Yeah, like when the dust settles, right? But, if I have an issue with my account, I want to pick up the phone and talk to a human. Maybe just for like my everyday transactions, I would agree with you. Like I would be completely fine with speaking with an AI agent, like, move money from this account to this account. But yeah, when the dust settles, when I have an issue, either looking for a specific loan because I want to expand my business, or I have fraud on my account, I want to pick up the phone and talk to a human.
Yeah. If we talk again in 6 months, when we talk again in 6 months, it might have changed for you, right? Because the efficiency of working with an AI is so fast, right? It's so easy. And they don't lose context in the same way a human can lose context, right? Now they do lose context when it gets deeper. I know I'm contradicting myself from earlier, but we'll see what happens. It's moving so fast, you might not even be able to tell anymore.
So, you've been to a lot of events, fintech related events. We've been to a ton as well. And there's so many AI providers out there, right? You were talking about onboarding 4 or so. With that, there's a lot of, legitimate, real, recognized entities working in the space. And then there's a lot of what I call them fly by night entities working in this space. If you're, a community financial institution in North Dakota, what would you use to kind of differentiate between, hey, this is a legitimate industry or business and this one's kind of shady? Because the AI tools are so powerful, you can make yourself look pretty legitimate pretty easily there.
Yes, absolutely. This makes me look 6 foot tall. It's fantastic. I'm only 5'5" for the record. No, you're exactly right. We've seen this through the spring season. Every company seems to now be AI, right? Everybody's AI. So 2 points here. One, the first thing I ask and talk about with any vendor that's new or any part, I hate the word vendor, partner, right? They're partners. Is tell me about your banking experience. And if they don't have that experience, that's a big red flag, right? Because it's really hard to understand how banks think, right? That what risk is, right? Whole different concept than every fintech ever out there has. Second thing I look at is who their backers are, right? Are they backed by a VC organization? If they're VC backed, they usually are. Are those VC funds ones that align value-wise with bankers, right? There's certain funds, I won't name them, but they are very much about dislocating or replacing banking, right, with their technology. And so, those probably aren't good partners for us long-term, short-term, right? Third thing I try to consider when I'm looking at it is, are these legacy people who are slapping AI on their platform and calling themselves AI, right? Their whole concept of tech debt, it's really, really hard to go from a rules-based, system that is building software to an AI-based system that is inferring and actually being able to think through a process, right? Or I can Canadian it up for your friends up north of you, process. You guys are close. You're close to the border.
Close, yeah.
So those are a couple ways I do it. And then the fourth is, are these people I really want to work with, right? Or are they, really just not the people that understand banking? Fifth, is it a product? Is it a company? Are they going to get bought out soon, right? So one of the biggest challenges that you have to really dig through is you could have a really good product, right? And it's not going to be a great company, but it's a really good product. And I won't name any category because I don't want to create anxiety for any of them. But what we see happen for our fintech friends is they get to about 100 banks. When you get to about 100 banks, you are now scaled and successful in a lot of places and in people's eyes. And then a core comes in and buys them. Right?
Yeah.
And, my friends at the core, the provocative thing I say about them is that's where innovation goes to die. So I need to know where my vendor, my partner is going to land in the future, right? I have to have an idea. And finally, I've become comfortable knowing I'm going to make a bad decision sometimes, right? And it's happening faster and faster because of Moore's law and how fast things are moving today. But I know how to take that bad piece out or the piece that has become antiquated and bring the next piece back into the tapestry. So that's the process. Now that scares bankers, right? Because we're taught not to make bad decisions, right? If you make a bad decision, you're going to get in trouble. But you have to be comfortable in this world right now with that philosophy. And it's not about, okay, everything failed and we broke and we're going to go back to the old way, because you can't go back once you're through the rabbit hole. But how do you bring in the next piece of technology to solve the problem?
Marc, from your view, what are the early low risk AI wins community banks can try today. Places where automation improves efficiency without disrupting core systems and creating big compliance headaches.
Yeah. So before I even give you a first suggestion, to all the FIs that are out there, you've got to do something. Right now, I don't want to make this, an existential challenge, but agentic AI is your opportunity to thrive. Let's forget about surviving, but how do you thrive, right? How do you grow? How do you compete with the big banks? And make sure you're doing that? And agentic is the way to do that. So again, knowing that I'm going to make a wrong decision, I want to start with something that's safe, right?
Right.
Easiest one on my mind is fraud, right? It's fraud, right? Start there. Start with an internal process that only affects internal processes, right? Work through that, get your skill set up and be able to work through it, and then start to pragmatically expand it across other parts of the business. And I would say, if you want to be conservative and go slow and pragmatically, the last place I would put it is customer facing, right? That doesn't mean 3 years down the road. Probably
makes
means
sense.
a year down the road, right? And then the final thing is, there are people out here who want to help you, right? There are many communities that will do just exactly what I'm doing with you today to help each other, because I'm not competing when I'm a banker with you guys, right? I'm competing with the JP Morgans of the world, the cities of the world, right? That's who I'm competing with. And we have a right to win as community banks. We need for the United States to thrive, we need a robust banking system with several thousand banks in it, right? If we go down to 10 banks, innovation doesn't happen anymore because there's no need to, right? Just like why JP doesn't pay a savings rate, right? They don't need to, right? But the community banks have a place, and they need to take agentic as the opportunity really to step forward.
No, I appreciate that.
Yeah, don't be afraid to reach out to people, because we're out here to help. Life is really exciting for sure.
Well, Marc, that's our time. We really want to thank you for yours. If anybody wants to follow you or look up a little bit more about you, how would they do that?
So I'm on LinkedIn. Easy to search my last name. First name's Marc, M-A-R-C. Last name Rehberger, Rehberger. And you'll see a very irreverent picture of me there, so you can't miss it. It's a very nice agentic picture that makes me look very handsome and fantastic. So thank you for having me on your podcast today. I really do appreciate it.
Absolutely.
Thank you, Marc.
Thank you for listening to our AI and Banking episode. Follow 701 Chain and join us next time as we continue exploring the future of banking.
This recording is for informational purposes only. It does not constitute legal, financial, or investment advice.
The views expressed are those of the hosts and guests and do not represent any organization, including Bank of North Dakota. Please seek professional guidance before making financial decisions.